Okay, good morning. Welcome back. This is our second week of class, short week we have. We're going to get started. Learning Catalytics, we have a question out there, so you should get logged into Learning Catalytics. You can go into Learning Catalytics through My Accounting Lab if you have a laptop. Typically, a mobile device is going to work better if you go in through learningcatalytics.com and the session ID is there. Learning Catalytics today is for real. Last week I posted Wednesday scores. Wednesday scores do not count. They were there so that you could check to make sure everything was working as you thought it was. And those scores from September 2nd in My Accounting Lab, I'm going to omit them. I'm leaving them up for a few more days, and then they'll be omitted because they don't count from the first week. Today counts. Today is for real. Today, your scores will count towards your grade. It counts as a quiz. Today only, your grade for today is participation, 100% participation. So you could answer anything in theory and get credit as long as you answer. Starting next week, it'll be a blend of 50% accuracy and 50% participation. So when you answer, and this is the key in here, in Learning Catalytics, when you answer, you need to make sure you answer, and then different question types require you to hit submit. If it's a standard multiple choice, you can just select your answer. You should then see it say your answer has been hidden for privacy. Make sure you do that. Make sure you see that message because you want to make sure you earn credit. So, okay, the session ID, just a reminder, changes every class period. So it will be on the screen today for a couple slides, and then after that, it will be in the chat room. Amir will be pasting it in because remember, people as they join us can't see anything prior in the chat room, so we'll be continually pasting in that session ID. Okay, so starting out with what's due this Saturday. This feels weird already that we're talking about what's due this week. Whoops. Okay, the Chapter 1, Part 2 homework. We are going to finish up the homework today. We have some pretty significant things to do today. We're going to be going over the financial statements, and this is where we start the semester saying, here's our basic financial statements, here's an overview. So we're going to do 3 of the 4 financial statements today, and then at the very end of the semester, we're circling back to the financial statements. So it's kind of like bookends. We do the basic financials today, and then the rest of the semester is going to be spent, how do we get the numbers on those financial statements, what do they mean, and then we're going to end up at the end with the financial statements again. So the homework is due in My Accounting Lab this Saturday again, and we'll go forward. So the question that's in Learning Catalytics right now, which of the following entities do not use financial accounting information? Just something you should remember is the question number there has no significance to you. It is my internal way of knowing which question I am in Learning Catalytics. So that question number you see there, question 4, it has no bearing on anything. And I don't know on any particular day how many questions we're going to do, and so the numbers don't tell me anything. So the question is, which of the following entities do not use financial accounting information? This question will be open for about another minute, so you want to make sure you get your answers in so you receive credit. But I'm not closing it right now. This is that 1-minute grace period or so from the start of class. So the answer is all of the above use financial accounting information. So investors, creditors, and the public use financial accounting information. We see the financial statements as the general public. I make decisions about companies. Maybe I can look at their financial statements, decide if I want to go to work for that company or be one factor in whether I do. Maybe I look to see if I want to buy stock in that company as an investor. Maybe I look and see if I want to be a consumer of that company based on information I see in that statement. So, so this question, it will be open about 30 seconds more, and then we'll close it. So, first thing we're going to do, just a quick little review of the types of accounts. There are three types of accounts in the accounting equation, and the first one is assets, and assets are economic resources that have expected future benefit. Now, just a reminder, we're going to fly today, and the slides are on Blackboard. The things that are not on Blackboard are the questions. So if you want to keep track of a question, just screenshot on your device. And the homework problems are not in the slides either. But the concepts, like I may skip a slide or two, that's not saying it's not important, but it's saying I don't need to read the slide to you. The slides that I've put on Blackboard are important unless I specifically say we're skipping a section. Know that that information is valuable. The slides are kind of an outline of the entire chapter. We can't go over every single slide, and it's by no means saying they're not important, but they're in there, so you don't have to cross them off or anything. They're still good. Okay, so assets are economic resources, expected future benefit. Okay, I'm gonna answer that question so I'm gonna take a minute. I try not to read the chat room because I'll spend my time reading chat room. I'm not able to access Learning Catalytics for some strange reason. That would be a login issue. So what you need to do is go to the forgot username, go in and get your username and password. So that's going to be the issue there. If you've purchased the package, that's a username and password issue. And if I don't know if you're using a device or a laptop, if you're using a laptop or computer, you can go into Blackboard, click on My Accounting Lab, and then click on Learning Catalytics and get it in that way. So anyways, I digress. So anyways, back to assets. So assets have some future economic benefit. They're economic resources. Examples of assets are things like cash, accounts receivable. That's money that's due to us. It's like loans we've made. Cars we own, as a buildings we have, equipment we have. Those are all assets. Next up are liabilities. These are outsider claims. There are debts. Debt is interchangeable with liabilities. We don't see debt per se usually as a term on a financial statement, but liabilities are debt. And then we have owner's equity. Owner's equity is insider claims. This is the stockholder's interest in the assets. Assets generally are financed one of two ways, either through liabilities, which is debt, or through equity, which is investors investing in the business, retaining earnings for growth. So we have assets plus equal liabilities plus equity. That is the accounting equation. Now, owner's equity can be split into revenues, expenses, and dividends, and we're going to see that as we go forward. So we have assets equal liabilities plus equity, and then equity gets split into revenues, expenses, and dividends, and we'll see the statement. Okay, we are not going to do this one right now. We probably are going to come back to this one. Okay. So the accounting equation, assets equal liabilities plus equity. So another question, okay. So I closed the first question. Next question. Okay. If liabilities are 500 and assets are 1,200, what is equity? Don't enter commas or dollar signs in your answer, just enter your answer. And again, this question is in Learning Catalytics. so you're it. If anyone needs any help in the room with Wi-Fi or anything like that, we do have tech help here. So raise your hand if you need help at any point. Anything. Anyone? You might just get a free accounting lesson today. Okay. Okay. On this one, if liabilities are 500, assets are 1,200, what is equity? Okay. Now, so assets equal liabilities plus stockholders' equity. It could be assets equal liabilities plus equity. That last term, that equity term, could be equity. It could be owner's equity, stockholders' equity. We can interchange those terms. So we know liabilities are 500. We know assets are 1,200. You should be able to solve for what equity is. Okay. You have about 10 seconds to get your answer in. We have 3 people who have not answered yet. So you're down to the final. And remember, today only is participation. So you get full credit. So get an answer in there. Okay, so what we see here, we have substitute assets 1,200, liabilities 500. So then we can take the 1,200 minus the 500 and get 700 as our answer. Okay, so now we're on to the biggie, the big part of today. This is kind of review from last week. Now we're going to say, okay, let's look at our financial statements. Financial statements are issued, kind of scorekeeping. Here's the results of what happened. And there's 4 main statements. We're going to go through 3 of them. We'll talk about the 4th. But this is Exhibit 1-6 in your book. It is also in the PowerPoint slides. So if you don't catch the whole one, that's fine. How well did the company perform during the year? That's the question. We're going to look at the income statement for that answer. Okay? And when we look at the income statement, the general format is going to be revenues minus expenses gives us net income. Or remember, loss is in parentheses. It's negative. It means our expenses are bigger than our revenues. Why did the company's retained earnings change during the year? That would be our statement of retained earnings. And the basic format for that one is going to be beginning retained earnings plus net income minus dividends declared gives us ending retained earnings. And this is a bird's eye view. Basically, I'm calling attention to it because it's something you should go back to when you're studying, when you're reviewing. This is an important one, okay? Okay, what is the company's financial position at year end? That's going to be the balance sheet, and the balance sheet is assets equal liabilities plus equity. And then finally, how much cash did the company generate and spend during the year? That's going to be the statement of cash flows, and that's going to be our operating cash flows, our investing cash flows, and our financing cash flows. So our 4 statements are in that order. So this middle column, the financial statement column, that's the order the financial statements go in. We prepare them in that order. The income statements first, because the income statement, the net income flows onto the statement of retained earnings. The ending retained earnings balance flows onto the balance sheet. And then the cash balance is used in the statement of cash flows. What we're going to do in this chapter is we're going to do an income statement, we're going to do a statement of retained earnings, and we're going to do a balance sheet. We are not going to do a statement of cash flows. That one's a little harder to prepare, and we'll wait later in the semester to do that. But these are the 4 statements. Any company that's publicly held will prepare these 4 statements. And those 4 statements each answer a different question. The income statement, how did we do this year? The balance sheet shows our financial position at year end. Statement of cash flows. Very, very important. Statement of cash flows shows where we're getting our cash from. And that's important. Did we get our cash from operating, from selling stuff, selling whatever we're in business to do, or did we get our cash by taking out more debt? Those are two very different answers that shed a different light on the company. So again, this is Exhibit 1-6, and this is a good summary, like a bird's eye view of the four statements. The general format for the statement is in that third column, that answer column, and that's giving you just the general format for the statement, but we're going to go into all of the statements here. Okay, and if you have the slides, the next slide says, well, let's go from the income statement to the statement of retained earnings, to the balance sheet, to the statement of cash flows. That's the order the statements go in. That's a good thing to know that that is the order of the four statements. You have to prepare them in that order because each statement builds on the other one. Okay, so now we're going to look at those statements, and we're going to look at them in that exact order. We're going to start with the income statement, go to the statement of retained earnings, and go to the balance sheet. So the first one is the income statement. The income statement has the revenues and expenses for the year. And it's going to have a net income or a net loss. And just a reminder, the slides are on Blackboard. The big thing to know about the income statement is it's for the year, and it's revenues minus expenses. Income statement, revenue minus expenses is our net income. So what we're going to do now is we're going to do one of the homework problems. And the homework problem is an income statement. So we're going to do a really basic income statement, and I'm going to talk about it as we go. So there's, just going to dig in. And again, know that we put a lot up here. I'm kind of assuming you have those slides or have those available to you. Okay, so here we go. Short exercise 110. Now, in short exercise 110, it tells us the company began the year with total assets of $216 million and ended with assets of $358 million. It tells us about revenues and expenses and dividends. And it says to prepare the company's income statement for the year, complete with appropriate heading. In this problem, right off the bat, I'll tell you, there is, just like real life, there's information we don't need. So when you approach a homework exercise, don't feel like you have to use every number. You have to sort through what's important and what's not. We're doing an income statement. So the first thing we do with an income statement, with any statement, is we prepare the header. This is important stuff. This is not just fluff. Every time you pull out an income statement or a financial statement, it will start the same way. The very top line of any of the four statements, so we have four statements we're looking at, they're all going to start with the name of the company. First, always first. Because as an investor, as a creditor, as a user of financial statements, there has to be certain information on there to orient me to that statement. First thing will always be the name of the company. The second thing will always be the name of the statement. Okay? So every time throughout the entire semester, every time we do an income statement or a balance sheet or a statement of retained earnings, the first line is going to be the name of the company. The second line is going to be the name of the statement. Okay, so those are the first two lines. The third line is going to be the date line. Now, the date line can vary depending on the statement. But for an income statement, it tells you the period which it covers. So for this particular case, it's for the year ended December 31st, 2014. So it's telling us that this is our income for a year. An income statement is for a period of time. When you think about your own income, you think, well, this is how much I made last year. This is how much I made last period, but it's not as of this date. Well, what does this date mean on an income statement? It doesn't mean anything without a period of time. So an income statement has to tell you the period of time. Companies will typically issue income statements, public income statements for the year and for the quarter. But they can internally do them for the week, they can do them for a month, but typically we are going to see for the year, for the quarter, possibly for the month. Okay? So every single financial statement starts with the name of the company, then the name of the statement, and then the date line. And for an income statement, it's for the period ended. So that's important. Out of all four statements, you should know the date line. Okay, so every statement, you know it has to start with the name of the company, then the name of the statement, and then the date line. And you have to know, is this one date and time or for a period? Income statement is for a period. When you do homework, okay, when you have to do an income statement like this in particular, you cannot put them in any order. They have to be in a specific order. As a user of financial statements, we're used to seeing information in a specific spot. This is a big deal, okay? Okay, so we have the heading done. Next up, okay, we're going to list our revenues. An income statement, our very, very basic income statement like we're doing right now, most fundamental, is going to be revenues minus expenses. So I'm going to take my revenues, I'm going to subtract expenses, and I'm going to have net income. So I'm just filling in the words now. There's in your book, there's example income statements that go into several different expenses. But right now we're just looking at this to say, here's the most basic income statement we can have. Okay, now in the column, we'll put the numbers. Now this is 398. In the problem, it told us that we had, in the second sentence, O'Malley Services earned revenues of $398 million. Okay, so something to note here. If the problem says $398 million, we're not going to insert 6 zeros here. We're going to leave it as 398, and we're going to put million at the top of the column. So, as an aside, for when you're doing your homework, use it like it's presented. So when I see 398 million, I'm just going to use 398. I am not putting the 6 zeros in. If you put 6 zeros in, you've just made it whatever more than billion is. You've made it an enormous number because it's still in millions. If you ever have a doubt about whether you should use the 6 zeros or not, click on the Help Me Solve This. It'll bring up an alternate problem and you can see the size of the answers. So make sure you're not putting in those extra numbers. Also, do not email me and tell me on this one that you entered 398 with 6 zeros after it and you should get credit because it's the right answer. It's not the right answer. It's grossly wrong, okay? So 398 in the million column. Another thing to note, and you don't have to worry about this. This is just, I'm just telling you what convention is. You're not graded for it. In financial statements, typically the first number in a column has a dollar sign in front of it, just like this one does. Okay, now the next number, expenses, doesn't have a dollar sign. Okay, so if you look at a financial statement, you'll see a dollar sign at the top, okay, in a column. And then this one, we have 167, which is given as our expenses in the problem. And then we're going to draw a single underline under it. A single underline says we're doing a subtotal here, okay? We're going to do some addition or subtraction. By the way, most of the, if you're worried about math in this class, you should not be. It's arithmetic. It's basically basic addition and subtraction for the most part. So this one, we have expenses minus, or revenues minus expenses. So we're going to take 398 and subtract 167. That single underline says we're doing a mathematical operation above here, all the numbers above this. So we're taking 398 minus 167, and then we get 231. Now, 231 is a total, so it gets a dollar sign in front of it, okay? And then, since it is the bottom line, since we're done with the statement, it gets a double underline under it, okay? So a single underline means that we're doing some mathematical operation immediately under the single underline, okay? The double underline means we're done with the statement. This is the final total. We put dollar signs typically at the beginning of a column and at every subtotal in total. So you'll see a dollar sign for revenues because it's first in the column. You'll see a dollar sign on net income because it's the end. Now, a couple things here. First of all, My Accounting Lab doesn't care about dollar signs, okay? So you're not going to be tested ever. I can't imagine you ever being tested in this class where the dollar signs go. And there is sometimes some inconsistency on dollar signs. So you don't have to know that. I was just telling you that so you kind of look at it and don't think that I missed a dollar sign here, okay? This is the way it's done. You do need to know that a single underline and a double underline in between there, it's waiting for an answer. Yes?
So like revenue, and we were at $100 then, and we get that wrong, or?
The question is, My Accounting Lab will accept dollar signs. It doesn't care. So dollar sign, really, it doesn't matter, but I want you to at least know that you're never going to get credit or not get credit based on a dollar sign. Unless the question specifically says don't answer a dollar sign, Learning Catalytics hates dollar signs. So that would be not, so that's the only time where you would need to not to put one in, but it doesn't matter for My Accounting Lab. Okay, so, but what does matter is one of the homework problems this week, they'll give you like a blank page and you have to do an income statement. Now, it gives you extra blank lines because it doesn't want to say, oh, there's only 2 lines on here, but there might only be 2 lines. So you put your revenues minus your expenses. And then there's a couple blank lines. You do not put your net income right after that. You look on the worksheet in My Accounting Lab for the cell that has a single underline at the top and a double underline at the bottom of the cell. That's where the net income goes. So you have to watch for those totals. That's when you see a single underline at the top, a double underline underneath, that's where the line needs to go for net income. So just watch that. That comes up occasionally. So when you're looking at something, you've got several lines, look to see if there's a total line somewhere, and that's where that bottom line needs to go. Okay. So this is revenues minus expenses equals net income. Notice that we do not use minus signs. We don't put a minus expenses because as an informed user, we would look at an income statement and immediately know that income, we take revenues minus expenses. So it doesn't, we don't put negatives around expenses even though we're subtracting them. Because remember, we have a knowledgeable user. Investors, creditors, business people know this about income statements that expenses are subtracted, so they're not negative. You can have a negative expense, by the way, and that's added. So it is wrong if you put your expenses in as negative. Okay, so this is our income statement. So that's our first statement. We're done with our first statement. Okay, as we go in the semester, we'll have more expenses, there'll be more subtotals, but that is the basic format for an income statement. Okay, so now let's do a question. Let me throw this out there. So this is just kind of all the accounts that would be listed on the income statement. Now something, you have it on there, but I want to talk, I guess it just came up to me. As we go further in the semester, there's 2 other items that end up on an income statement. There is something called a gain and something called a loss. And those are not from ordinary operating activities. They're not from, if I'm in business to sell picnic tables, when I sell a picnic table, I don't sell it at a gain or loss. But if I own stock in a corporation and sell it, I can sell it for a gain or sell it for a loss. There's weird rules about gains and losses, and we'll get into those. So income statements have revenues, expenses. You're also going to see gains and losses on income statements. So that's just to kind of be aware. You're not going to see it in this chapter, but on this question, you have to choose all the accounts that be listed on the income statement. And this is one where you have to select several accounts, and then you have to submit it when you're done. So make sure you submit your answer on this one. Okay, so it's out there. So you're going to have to pick multiple answers and then submit your answer when you've chosen everything. Okay, another 30 seconds or so. Again, select the accounts that would be listed on the income statement out of this selection. Submit your answer when you're done. Today is participation based. Next week, we go to the model where it's 50% participation, 50% accuracy. So today, there is no penalty for not getting it completely right. But you do need to answer to get credit. Final 10 seconds, so you want to at least select something and submit it. Anyone in here need help in the room? If you're online, ask Amir. Okay, so we have revenues, expenses, gains, and losses. So those are the income statement accounts. Those other accounts, assets, liabilities, and stockholders' equity, those are balance sheet accounts. So we'll see that coming up. Now, I have one more question before we go on to the next statement. Okay, now, this question. Assume the beginning retained earnings is $100. Revenues for the year total $75, while expenses total $50. The company paid out dividends during the year totaling $10. What's net income? So you have to enter this answer, and don't use commas or dollar signs in Learning Catalytics, just the number. Okay, we just did an income statement. That income statement that we just did, you can use that format for this question. Okay, you only need to use 2 numbers to come up with the answer on this question. So your fundamental income statement is going to be revenues minus expenses. Okay, so when you're looking at net income is revenues minus expenses. So again, like real life, we have a lot of information presented to us. We don't need to use everything in there. So revenues minus expenses, we're going to close the question in about 10 seconds. So get your answer in. Your final chance to answer is just about up here. Okay, so 75 minus 50 is going to give us net income of 25. Okay, so don't feel compelled to use every single number. Beginning retained earnings has nothing to do with net income, so that was kind of a distractor thrown in there. Dividends are never, ever, ever subtracted from net income. Okay, dividends are not an expense. Dividends reduce retained earnings, but do not ever, ever, ever impact net income. So net income is revenues minus expenses. Okay, so onward, statement of retained earnings. We're gonna go straight to the statement because you're gonna get that format that was on that slide right on the statement. So we have another set of information, and it tells us that the company began the year with retained earnings of $286 million, revenues during the year were $482, and expenses $337, and declared dividends. So what's the ending balance of retained earnings? We're going to do the statement of retained earnings. Now the statement of retained earnings reconciles our retained earnings from the beginning of the year to the end of the year. What are retained earnings? They're this running total of all our earnings to date from the beginning of time for the company to date, less all the dividends that have been declared. So it's kind of a score, so to speak. It's not cash, it's just the accumulated all the earnings to date, less all the dividends declared. Companies actually have a statement of stockholders' equity. This statement of retained earnings is on the statement of stockholders' equity, but the statement of stockholders' equity is way too big to show in the first chapter. So we are going to eventually get to the statement of stockholders' equity. But statement of retained earnings works for us right now. So first thing we're going to do, I put the problem down at the bottom so I had room to work at the top. First thing I'm going to do are the headings. Again, just like my other statements, I start with the name of the corporation at the top, followed by the name of the statement, followed by the date line. The date line for the statement of retained earnings is for a period of time, just like for the income statement. So this is for my year ended. It tells me that in the problem this is for a year. But I need to know what activity I'm looking at. When I look at a statement of retained earnings, I'm looking at net income is on a statement of retained earnings. So is that net income for a month, for a quarter, for a year? It makes a huge difference. Okay, so next up, for the statement of retained earnings, we're going to start with the beginning retained earnings balance. So this says retained earnings December 31st, 2013. Last year's year end is the same as this year's beginning of the year. So typically on statements, you'll see December 31st, 2013. That was a year ago, and that's considered this year's beginning retained earnings. Because when we shut our doors at 11:59 p.m. on December 31st, 2013, and we open at midnight, then that is the same balance. Okay, so the ending balances from one year are the beginning balances for the next year. So we're going to start with our beginning retained earnings balance. We're going to add to that net income. Now the statement might not say the word add, but we're including it here just as kind of a mental note for you to know, oh, okay, we're going to add net income. Then we're going to subtract dividends declared. So again, putting that word less in so that you know what to do with it. And that's going to give us our ending retained earnings. Okay, so that's our basic format for a statement of retained earnings. We start with our beginning retained earnings. We're going to add our net income. We're going to subtract our dividends declared and come up with our ending retained earnings. So let's start putting numbers on here. The first one, again, in millions. So we're not going to put those zeros in our answer because that would be grossly overstated if we added 6 zeros here. So 286 is our beginning retained earnings. So again, last year's year-end figure is this year's beginning retained earnings. We're going to add our net income. And our net income, now we have to deviate slightly here. In our problem, it doesn't tell us our net income. We add our net income. But we know that net income is revenues minus expenses. It tells us in the problem that our revenues during the year were 482. Our expenses were 337. So 482 minus 337, we get 145. So in this part of the homework, you need to do a little calculation off to the side. You're not given net income directly, but you can calculate it and then plug it in there. Okay, next up, we're going to subtract dividends declared, and we're going to put parentheses around them to signify that they're getting subtracted. And then we're going to do a single underline. And that single underline says we're doing some mathematical operation, addition or subtraction, to the numbers above it. And it's usually the numbers going back to the last single underline, okay? So in this case, we're going to take 286 plus 145 minus 59 is going to give us our ending retained earnings of $372 or $372 million, and we're going to put a double underline because we're done, and we'll put a dollar sign in front. Worry about it later. Okay, so that's our basic format for the statement of retained earnings. Beginning retained earnings, add net income, subtract dividends declared, gives you ending retained earnings. Why don't you underline 145? I'll deal with that question. Because we're not doing a subtotal directly under it. We're saying we're going to take the 286 plus the 145 minus the 59. So we've got three numbers. The single underline says we're doing mathematical operations on the numbers above here, usually back up to the last single underline, or in this case, the whole column. So that's why you don't use that there. Okay, so that's the statement of retained earnings. So that format, yes?
5 minus 59 equals.
It could be a subtotal. Usually, we've never referred to it as an equal sign before. Yeah, I've always, in accounting, we're mired in tradition. We call it a subtotal. But I'm just trying to think if there would be a case where that would not be the case. It's a subtotal because you're not necessarily done, because equals implies that it's the end, and you can have subtotals in the middle. We'll see where we have like one single underline, then two more numbers, and another single underline. And I guess that's where we would hesitate. But if you would like to think of it, it will work like that. It's just not the end. So we're done with the statement of retained earnings. Okay, why not do I'm going to answer that one. Okay, why not do the parentheses for expense for the income statement? That's because on the income statement, we know that users know that expenses are subtracted. There are cases where we will have negative expenses that are added. So if you put brackets around it, it means you're adding it because we can have negative expenses. In this case, dividends declared will never be added, and that's why this is just a little bit different. But in income statement, you do not put brackets around the expenses. When you see brackets on an income statement, they're at the bottom. That means that there's a loss if your expenses are bigger than your revenues. Okay, so let's do another question here. Okay, so this looks very similar to the last question we had, but it is slightly different. One of the last ones. Okay, we have beginning retained earnings, $100. Revenues for the year total $75, while expenses total $50. The company's paid out dividends during the year totaling $10. What's ending retained earnings? Just to help you there, put the formula up there. Ending retained earnings are your beginning retained earnings plus your net income minus your dividends will get you, and that's the basic format for the statement. Okay, so you're taking your beginning retained earnings plus your net income minus your dividends. You have about another 15 seconds or so to answer here. Again, today's participation, so make sure you get an answer in. Final opportunity to get your answer in. And again, I have the formula up there, your beginning retained earnings plus your net income minus your dividends. Okay, so your beginning retained earnings is $100. Your net income is $25. We just did it. That's your revenues minus your expenses minus your dividends of $10 gives you the $115. Okay, now, so we have the income statement, which would come down to the net income for the year. We have the statement of retained earnings, which comes up with the ending retained earnings. And our next statement is the balance sheet. And the balance sheet, in its most simple form, is your accounting equation. It's your assets equal your liabilities plus your equity. So what we're going to see on the balance sheet, I just said all this. So we're going to do a balance sheet, and you're going to see it. Okay, so short exercise 1-12. We're going to do an income statement. If you're writing notes, you're going to need a little more space than for the other statements because it does tend to be a little bit bigger. So it tells us at December 31st, we have cash, receivables, and inventory. So cash, we know what cash is. Receivables are amounts of money due from others. So an example of a receivable a business would have, if OfficeMax ships paper to Kent State, and Kent State says, okay, we'll pay you in 30 days, because we don't, in business to business, typically you don't pay cash for things. So OfficeMax ships paper to Kent State for $1,000. OfficeMax has a receivable of $1,000 because it's owed money for that sale. Okay, so that's receivables. And inventory. The company's equipment totals $185,000, so that's equipment it owns and uses. The company owes accounts payable $25,000, so this is the company bought something on credit and it owes $25,000. It has a long-term note payable of $169,000. Long-term note payable, that could be like a mortgage. Common stock is $30,500. So prepare the balance sheet at December 31st. Okay, now, before we can get to the balance sheet on this homework problem, really important, when you do this homework problem, you're going to have to do some calculations before you can jump right into the statement. We are not told what equity is, just one component. Equity has two components. This is going back to last Wednesday. Stockholders' equity is composed of two things, common stock and retained earnings. In this problem, we are told what common stock is, okay? Okay, so we need to solve for equity. We know what common stock is. We don't know what retained earnings is. So we're going to have to go kind of at this problem a little, a calculation on the side first, and then we can do our statement. So when you're going to do your homework problem, this is exactly what you need to do. If you do it in this order, you'll be fine. Okay, so we need to solve for equity. So we're going to have to do a couple steps to get there. The balance sheet is your assets equal your liabilities plus your equity. We are not told what equity is. We know what one component of it is. We know common stock is $30,500. So if we knew what total equity was, we would know what retained earnings is. So that's where we're going first, is we're going to figure out total equity. And then once we know total equity, we're going to figure out retained earnings. Okay, so our accounting equation is assets equal liabilities plus equity. So first thing we're going to do, what are total assets? So we need to calculate total assets. So I'm going to go through here, and I'm going to pick out all the assets. And what I see here is I've got cash. Cash is an asset. Receivables, $17,600, those are an asset. $79,000 of inventory is an asset. Equipment is an asset of $185,000. So my total assets are $302,600. Okay, those are coincidentally the first 4 items given to us. Okay, so I have to calculate my total assets. So my assets are cash, receivables, inventory, and equipment. All those are assets. I add them up. I get the $302,600. So you need to have that written down off to the side. Total assets are $302,600, because then I'm going to the next question I need to answer. The next question I need to answer here is what are total liabilities? Because I'm trying to get to assets equal liabilities plus equity. So total liabilities here, I have accounts payable of $25,000 and long-term notes payable of $169,000. So my total liabilities are $194,000. We're going to talk about common stock in just a minute. So we'll talk about equity in a little more depth in just a minute. So hold on just one moment there. Okay, so what we have right now is we have assets, we just calculated. We have liabilities of $194,000. So now when we go to the accounting equation, we have assets of $302,600 equals liabilities of $194,000 plus equity. So now if I solve for equity, remember that problem we did early in the class where we were given assets and liabilities and we had to solve for equity? Same exact thing here. We can solve for equity by taking assets of $302,600, subtracting liabilities gives us equity $108,600. Now, equity in total is the stockholders' claims to assets that aren't financed by liabilities. Now, this total equity is composed of 2 pieces at its most fundamental. There's lots of pieces later on we learn about, but at this fundamental level, equity is composed of 2 pieces. The first is common stock. Every corporation has common stock. That's when you get a stock certificate or you buy stock in a company, and you give them so much money and they say, okay, you own 1 share of stock. That's common stock. Common stock is a legal term. It's an accounting term. The word common does not mean generic. This means common stock. If a company has stock, it has to at least have common stock. Every publicly held company has common stock. There's another kind of stock called preferred stock. Very few companies have that. Every single company has to have common stock. So those are the shares of stock that the shareholders own, common stock. The other piece of equity is retained earnings. And retained earnings is a running accumulated earnings to date less dividends declared. So what we can do here is we know what common stock is. Equity is $108,600. Equity is common stock plus retained earnings. So now we can plug in what we know. We know the $108,600 is what we solved for. Common stock of $30,500 was given in the problem. So that gets us to, when we subtract the 2, we end up with our final answer here of retained earnings being $78,100. Okay? And that's what we had to do. All these calculations to get, we needed retained earnings. So before you start this balance sheet, you're going to have to go through those calculations and figure out retained earnings. Okay, now on to the balance sheet. So the balance sheet. So we keep all our notes off to the side, we'll use them. The balance sheet is going to start with the name of the company, followed by the name of the statement, and then the date line. The balance sheet is the only statement that is as of one moment in time, one date. It's a snapshot. It's what are our balances on this date. So the balance sheet is a single date. It is the only statement that is a single date. So watch your statements. When you do a balance sheet, it's a single date. All the other statements are for a period. Like you earn income for the year. But a balance sheet, what's your cash balance at the end of the year? What's your loan balance at the end of the year? So balance sheets are one single date. Okay, now the balance sheet's going to be wide. It's going to be assets on one side, and on the right side we're going to see liabilities and equity. It is a representation of the accounting equation. So our assets, we're going to start with current assets. Now, we've got some new terminology here. Current assets are assets that are going to turn into cash or be used up within a year. There is a specific order on the balance sheet. We start with the things that are closest to cash to the things that are longer term in nature. So the order that I do it in here is the order you have to do it on your homework, and that's not just homework, this is how it's presented in real life. Balance sheet starts with your most liquid assets, the things that are closest to cash first, and work your way down towards the longer term assets. So current assets, cash, $21,000. These are all given. Receivable, $17,600. Inventory. So those three numbers are our current assets. That's everything that's going to turn into cash or already cash within the next year. So notice I've drawn a single underline. So now I'm going to subtotal that, and I have total current assets. So I'm going to be adding the three current assets to get my subtotal of $17,600. Technically, I'd put a dollar sign there. Again, you're not being graded on where those dollar signs go. Okay, total current assets. So then I go on and list, then I put down equipment, which is a long-term asset. Equipment is considered a long-term asset because it'll be around for more than a year. So we have the $185,000 giving me total assets of $302,600. When I see a single underline, I add or subtract the numbers above there up to the previous single underline. So here I take the total current assets of $117,600, add the equipment, and I get total assets. And that $302,600, that's what I calculated when I started doing my calculations for this problem. So I'm reasonably confident I did it right so far. Okay, next up. Okay. Next up, I'm going to do my liabilities and equity. So I finished the asset side. Notice that I put a single underline under equipment because I'm adding the two numbers above that. And my total assets, I put a double underline because I'm done. We have assets. The accounting equation is assets equal liabilities plus equity. So now I dig into the liability side. So current liabilities, these are things that are due within a year. So I'm going to have accounts payable. These are typically 30 days or thereabouts. Long-term liabilities, long-term notes payable. So I only have two liabilities in this problem. One is accounts payable, which is always current. The second one is long-term notes payable, single underline, and I get my total liabilities of $194,000. Next up, I've got stockholders' equity. So I'm not putting a double underline because I'm not done with this side of the statement. This side of the statement is liabilities plus equity. Next up, stockholders' equity, common stock, $30,500 we were given. Retained earnings, we calculated already. That was what we started with, the $78,100. So then my total stockholders' equity my total stockholders' equity is going to be the $30,500 plus the $78,100. Okay, so then my total liabilities and stockholders' equity is going to be my total liabilities of $194,000 plus my total stockholders' equity of $108,600. That'll be my $302,600. I know I'm right because it equals my assets. A balance sheet, your assets have to equal your liabilities and your equity. Okay, so we have our balance sheet. So now we've done the income statement, the statement of retained earnings, and the balance sheet. The next statement is the statement of cash flows. It shows where our cash came from and where our cash went. We are not going to get to the statement of cash flows in this chapter particularly, other than to know it exists, know that it shows the sources and uses of cash, and it's for a period. So beyond that, we're not going to physically do a statement of cash flows in this chapter. What I want to do now is we're going to do we have got a quick homework problem that is based on the accounting equation. Here it is. Okay. So we're going to do exercise 1-17A. This one's kind of a fun little puzzle. It doesn't take too long once you know to look for it, what to look for. This tells us that City Car Wash has current assets of $180 million, property, plant, and equipment of $300 million, and other assets of $110. So they're giving you all their assets, and then current liabilities are $105 and long-term are $280. So the first requirement is to write City Car Wash's accounting equation. So accounting equation is assets equal liabilities plus equity. You're going to see this over and over. So the first thing I'm going to do is figure out my assets. My assets are the current assets of 180, property, plant, and equipment of 300, and other assets 110. Okay? So I go through, I identify the assets. So I'm given those three assets, and that gives me total assets of 590. Okay? Because remember, I'm trying to get the accounting equations. Assets equal liabilities plus equity. So we have 590 as my assets. Next up, I have liabilities. My liabilities are 105, my current liabilities, and my long-term liabilities are 280. So my total liabilities are 385. So now I've used all the numbers that I'm given in this problem. And I need to solve for stockholders' equity. Stockholders' equity. This again, we've done this a couple times. We have assets, we have liabilities. So if I take my assets, subtract my liabilities, I will get stockholders' equity of 205. So my accounting equation is actually 590 equals 385 plus 205. That's how I get to my accounting equation. So that is the first requirement. Okay. Now, this problem actually had questions to answer beyond that. So the first one was use these data to write their accounting equation. So we did that. The next question is how much in resources does City Car Wash have to work with? How much does City Car Wash owe creditors? And how much of the company assets do the stockholders actually own? So the first one, how much in resources does City Car Wash have? Resources are 590. Total assets are the answer for how much in resources. So number two, the answer is the 590, the total assets figure. Number three, how much does City Car Wash owe creditors? So that's the total liabilities. This is just working its way. That total liabilities are what the company owes creditors. And then number 4, how much of the company assets do the shareholders actually own? Okay, that is going to be answered by the stockholders' equity, the 205. So, just to recap, number 2, how much in resources? That's our total assets. Number 3, how much does it owe creditors? That's total liabilities. And number 4, how much do they really own? That's going to be your total equity. So these questions 2, 3, and 4 line up exactly with the accounting equation. Assets equal liabilities plus equity. Those are the answers, the totals in that order. Okay, so I sent out a question. Which statement reports assets, liabilities, and equity at the end of the year? Okay, which statement reports assets, liabilities, and equity at the end of the year? So we just covered 3 or 4 statements. We covered income statement, statement of retained earnings, the balance sheet, and the statement of cash flows. So of those, which one has the assets, the liabilities, and the equity on it? We're going to close this question in about 10 seconds or so. So give it a shot. Okay, now, the end of the year, we could actually remove that from this and the answer will be the same. I just heard you talking, so it's just okay. So the end of the year has nothing to do with what the answer is here. We could say which one has it at the end of the quarter, which one has it at the end of the month, but it's still going to be. So which statement reports assets, liabilities, and equity? Okay, the answer on that is going to be the balance sheet. Okay, the balance sheet is assets equal liabilities plus equity. It's a visual representation of that. Okay, and then we have one last one for today. Which statement is the only statement that is as of one particular date rather than a period of time? So again, today, as you finish up getting your answer in here, today was participation. It does count. The answers will be, your score will be up in My Accounting Lab within the next 24 hours or so. I'll email out again so you can check it. Last week, the September 2nd one is just there for you to check. I'm going to omit it within a few days. Starting Monday next week, we will these will be for 50% participation, 50% accuracy. And last thing for today is we have homework due this weekend, and that's available. So make sure you get your answer in. I'm going to close it down in about 10 seconds. So make sure you get an answer in. If that helps you, go ahead and get your answer and make sure you've answered. Okay, so we're done today. Have a nice weekend, and be sure and email me if you have any questions at all.